Welcome back to another webinar or another video if you want to say. Today I made 4,770 bucks, 4,769. I was like at one stage I was like, oh man, I should take one more trade to see if I can get above 5,000. But every time I've done that in the past, it has always backfired. So I was like, you know what, man, it's not worth it. But we're gonna break down a few things which are going to be helpful, like the time frames that I use to day trade. What's the definition of a trend? What are the different type of structures? How to enter, exit, how to pick the stocks to trade for the day, how to manage your runners. So we're gonna go over the important stuff and when to pretty much walk away for the day. When is the time which like, oh man, I think it's enough. What's enough? All right, so let's break it down. It's time to go over this stuff. All right. So first things first. What are the different time frames that I use for the day? I've broken this down so many freaking times. We're gonna go over it literally in 1 minute, and we're done. All right. No, don't want to spend a whole day on it. So first things first. Different time frames to trade at different times of the day. That means normally what people do is they want to watch 2 minute, 5 minute, 10 minute chart at all times every day. So what I do is from 9:30 as soon as the market opened to 10 o'clock, I watch 2 minute chart, 10 o'clock to 11, I watch 5 minute chart, and from 11 to 3, I watch 10 minute chart. And after that, I don't trade. All right. But what I have seen some people do, they watch my videos or they they're part of my university, the KCU program. And what they do is they want to watch 2 minute chart, 5 minute chart, and 10 minute chart at the same time. Like they watch like there's a 10 minute chart open, 5 minute chart open, and 2 minute chart open, and they try to find the confluences between the three, or try to find confluences. There's times to trade confluences, but most of the time that you're gonna trade. Confluences are not gonna what time frame confluences is not going to make you money. The simple reason is you will always look for a reason to jump. If what will happen is, let's say if you're a red on the day, you will try to look for a reason to jump on into a trade just on a 2 minute chart. Let's say if you're it just wrecks it up. At later, like let's say it's 2 o'clock in the afternoon and you just want to find a reason to trade because you're red. All right, when you read, every single trade looks like an A plus setup. Yeah, am I wrong? When you read, every single thing looks like, oh my God, this is the one. They're gonna make me more, and this is the once in a lifetime opportunity, and that always happens when you're red on the day. And what people do is the biggest mistake they make is they trade on different time frame, which originally they know they shouldn't be trading. So that means somewhere where they should be trading 10 minute chart, now they're looking at 2 minute chart because they have trained their brain to try to find confluences between two different different time frames. So please don't do it. All right. The only time that you ever need to look for confluences is from 9:30 to 10. You can look for 5 minute confluence with the 2 minutes, and that too, I don't personally like it. But if you want to do it, you can do it. But after that, bro, 2 minute chart should be going away. Like pack it away. See you later. All right. It's usually around 10 o'clock where I'm like, all right, 2 minute chart. I'll see you tomorrow. All right. You don't want to open it again. Done. Sweet. It's super important. So this is the time frames. The second point that I want to go over is trend. What's the definition of a trend? Trend is higher highs, higher lows. All right, we are making highs. The next high is higher than the previous one. Higher highs. Next high is higher than the previous one. So we continuously make higher highs. And this is the lows. The next low is higher than the previous one. The next low is higher than the previous one. And the next low is higher than the previous one. Higher highs and higher lows are forming. So when we start making a pullback here, what basically you want to do is you want to see where the prices can make a higher low because the trend is up. Okay, that's the definition of a trend towards the upside. And the downside trend is like this, where we are making lower highs and lower lows. All right, that's definition of a trend. But there's different structures within this trend. There's different ways to trade this trend, or different structures. And different structures, the first structure is we make a move like this. That means one impulse move. Okay, this is called impulse. One impulse followed by a pullback. Okay, and then Pullback leads to push towards the next move, which is another impulse. So just know, once we see a big move, there's big percentage chances, if the move was legit move, not like just a trap setting up by the market makers, if the move is legit move, after a pullback, it gonna continue in the direction of the original impulse. Does that make sense? That's the first type of structure. Second type of structure is where we make the impulse. Is the impulse. We have a pullback, and then we try to make another impulse, but the previous way, the level where the previously sellers came along. And this works for either side, by the way. Downside as well, the same. All right. So what happens is, why do the prices reject? Just ask. Have you ever asked yourself this question? What makes the prices reject around this level? The sellers. The sellers are there, people who caught the move from this point to this point. They're like taking some profits. And when people are taking profits, they're buy orders, which they had bought first. Now, when they're taking profits, they're selling some shares, and those orders are coming into the market as sell orders. And when those orders are coming into the market as sell orders, there becomes a little zone of supply. Right? At the zone of supply, what happens is little supply comes in and the prices start rejecting. It's like if you want to sell an iPhone, right? You want to sell an iPhone, and on Facebook Marketplace, you go to sell an iPhone and you take a photo, you're like $300. And check this out. You selling your iPhone for 300, and you saw a lot of other people are trying to sell the iPhone at 300 as well. Right. So if somebody goes out there and he's like, man, I want to buy 100 iPhones, and there's about 150 people trying to sell iPhone at 300, what buyer would pay more than, like, if you as a buyer can get something for 300, why would you pay 350? That means there's enough supply for you to buy everything, but now you want to buy 100 iPhones, there's 150 sellers. That means the supply is more than the demand. Does it make sense? That means when the prices gets there, the buyers hit the sellers, and there's more supply, prices reject. Does it make sense? Everybody. So prices reject. And next time when the buyers are coming in, there's still 50 sellers left. There's only 25 buyers. That means there's still some sort of sellers left. That means the prices come around here, and the sellers meet again. Prices reject again. And this happens. So what happens is we start forming a little chop, right? We start forming a little chop. So where the buyers are like, oh, let's buy this. Sellers are like, let's sell this. So that start becoming a chop. Now, there's two ways how this can go. When this happens, there's only two ways how this can go. One is it goes towards the upside where the sellers move aside. The second is all the buyers are like, man, I don't need any more iPhones. Done. And when buyers are like, I don't need any more, sellers they start panicking. They're like, oh my God, I need to get out now. All these sellers start panicking. Does it make sense? All these sellers start panicking. What that means is, I'm sure you have done this definitely, where you want to get out of a trade and the price start coming down. Now you, instead of selling at 300, you're like, I'm happy to sell at 290. If something that you upload at Facebook, I don't know if you ever try to sell something at Facebook Marketplace, um, you can drop your price by 10 to 20% down. It's just like, oh, nobody bought it at 300. Let me drop a price down by 10%. Let me drop another 10%. Let me drop by another 10%. That's just the sellers are they're becoming desperate at this point. And then what happens? Buyers are not there, sellers becoming desperate. They keep dropping the price breaks below the downside. So the second structure is we have an impulse. The buyers are not really interested. They're not able to break out of the supply, and it either goes upwards. So how to trade the upwards, we'll talk. How to trade the downside, we'll talk. But this is the structures. And the third one is simply this: one big push. When the third one usually happens, one big simple push happens, that's incomplete. Why? Because that's where a lot of people blow their trading accounts when they try to trade this one huge move. That's where the FOMO comes in. You're like, oh my God, I don't want to miss this trade. Let me buy. And then you happens to be you buy right at the top, and you buy here. Okay? Because it's incomplete. That means after impulse, what's gonna happen? There's gonna be a pullback. And you buy here, it pulls back, and this is the point where you're like, oh my God, I'm down so much. Let me sell. And you sell, it makes another big move. You're like, oh my God, I sold at the wrong time. And then you buy again, then you sell at the pullback, and this happens, and eventually it starts chopping around. You're like, hopefully it will go, and then it breaks towards the downside. Hey, this happened to everybody, right? Where you're always on the wrong side, and then you hold and hope, and it never goes in your direction. That usually happens because the structures. All right, the first structures is IPI, impulse, pullback, impulse. Second is impulse, pullback, and move can be in either direction. So either direction. And third one is incomplete. Sweet. That's the structures. Now, how can you enter? Like, where do you actually find an entry after this? These are the moves that I like to trade. All right. I don't even like to trade this. This can get fucked. Like, literally. These are the moves that I like to trade personally. All right. That means I want to catch moves like this. So now where's the entry goes? So usually this will happen like this. So these are the green candles pushing up, and then we start having red candles coming down. Every single red candle. This is what you want to really, really pay attention to, yo. Every single red candle, you want to mark highs and red. Oh, just not even red. Red candle. Any candle that is pulling back a little bit or doesn't break the highs of the previous candle, that's a candle that you want to watch. All right. You mark the highs and lows. That means if it breaks above the high of this candle, you will jump in calls. Stop loss will go right below this. Next. If it doesn't, next one. Let's see if this one breaks. So basically, how this will go is the next candle will open, it start pushing towards the upside. This becomes your entry. Stop loss is below the lows of this particular candle you're watching that you used to enter, and the trade will go in the direction. All right, that makes sense. But now it has to be contained. This candle has to be contained towards the direction of the move. That means if the pullback is this, that means if you're watching the trade towards the upside, it has to be contained. It can't be like this. No, it doesn't make sense then. All right, the next candle you can't be trading. It has to be contained. I'll give you an example. I'll give you more examples as we go moving forward as well, because you will see these trades. But this is how you enter and exit. And now let's have a look on how I actually picked the first trade that I used. All right. So market's about to open, and this is trading view, and market's about to open, and this is the first candle that we saw. So every single day when I'm trading only these names. I'm trading SPY, QQQs, Apple, AMD, Amazon, Meta, Microsoft, Nvidia, Tesla. These are the only names that I watch. I don't watch anything else. All right. So it could be SMCI have a move. Yeah, good for everybody. BA is moving. Good. Netflix, good. Google, good. I don't care. As long as I can find plays in this, I don't care. All right. These are the only names that I trade. So now, first 2 minute candles in. This is before 10 o'clock, so I'm on 2 minute chart, and let's eliminate the stocks. I try to eliminate stocks. Okay. So if you're like, oh, which one to trade, eliminate. Does AMD look good with the wick on the top and wick on the bottom? No. Apple, wick on the top, wick on the bottom? No. You want to find the cleanest impulse, just like this, not the wicks. All right. Meta looks good. Nope. Has a wick on the top, wick on the bottom, QQQs. That look good. Doesn't look that bad. What about SPY? Doesn't look that bad. So I was watching SPY and QQQs. All right, at this stage, I want to see a pullback. We started getting a little pullback on SPY, but as I said, it's not contained. It has to be contained within the previous candle. The previous candle high is right here. The next candle should be contained if I want to catch a move towards the upside. That means the containment simply means if the previous candle is this, the next candle has to be like the highest point of the next candle can be this. That's it. It can't be anything more than this. So this is not the pullback that I want to see. So I'm still waiting. But what's happening on Apple now? Apple started making an impulse move. I'm like, okay, sweet. Now what's happening? QQQs have an impulse. Apple has an impulse. Amazon, no. Meta, no. AMD, no yet. SPY, not yet. All right, sweet. Next candle. Still waiting for a pullback. SPY breaks above the 200 moving average on a 2 minute chart. I like that. Meta, anything? No. What's Meta doing? Chop. What's Amazon doing? Any trend? No. Apple has a trend. AMD, still chop. So now we got three names: Apple, SPY, and QQQs. These three names have decent trend. But any pullback on anything that's contained? Nothing. So we got one more candle. All right. What about now? Any pullback that's contained? We got one, which is QQQs. Pullback is contained. Check this out. The highs of the previous candle, and this is the lows. It's fully contained. That means if the next candle goes, I will go long. This is exactly what I was watching. Actually, if you you might be like, yeah, I'm talking shit. Check this. This is Discord. I said QQQ is about 481.5 for 482 calls, very small size for straight. And then a minute later, I said I'm preferring SPY. Why? I'll break it down. So the reason was the next candle, as soon as the next candle happened, any trade setting up on AMD? No. Meta? No. Apple? No. Next candle, it's still contained within the previous candle. So I'm like still watching this QQQs. But when I saw this SPY and when I compared with SPY and QQQs, when I compared them both, I found out that 200 moving average is sitting on top of the QQQs on a 2 minute chart. And I don't like doing that. I respect 200 moving average where I personally believe prices can reject, right? So I didn't, I was like, nope, not doing it. But on SPY, I'm like, okay, 200 moving average is sitting at 559.69. For me, it's contained within the previous candle. So this will be the entry, this will be the stop loss. Sweet. This looks, this makes more sense. It's above the 200 moving average at this stage. So now, what am I watching? I'm watching SPY. What level? I'm watching SPY above 559.82, which is the high of this candle, right? And oh my God, this probably is too much sauce to put on YouTube, right? This is gonna go on YouTube, yo. Oh, SPY above 559.82 for 560 calls. Man. Anyway, hey, there's just one fact. Out of 100 people that are gonna watch this stuff on YouTube, 99 people just are watching on the couch. They're watching on the couch, scratching their fucking belly right now. Oh my God, life's so bloody boring. So they're not gonna do shit about it anyway. So, all right, SPY. I'm watching this, and as soon as the next candle broke towards the upside right here, I jumped in. All right, I jumped in the moment it broke, and this is how you pick the trade. This is how you pick the stocks to trade. Check this out. This is the one that I did. Anything else that's setting up right now that's contained? No, nothing. QQQs was the one, but has 200 moving average, so I can ignore it. SPY, I'm in the trade. The SPY was 55% trade. All right. The first level that I was watching was a pre-market high level. I'm like, okay, if it goes to pre-market high, that'll be nice. And it started making a pullback. No stress. Stop loss is still the same level. But at the same time, while I was doing all this, I saw Meta. Check this Meta chart. Apple started making a two huge pullback. Sweet. Amazon not contained right here. I could have gone long on Amazon. Maybe I didn't pay attention to it while this is contained, but maybe the trend was not actually, yeah, the trend wasn't really strong. The impulse wasn't really strong. Um, but I liked this Meta. Meta made a decent move, like right here, decent move, started making a pullback, is contained within the previous candle, right? Is contained within the previous candle. So I'm like, okay, I'll go long if it breaks above 529.5. And I actually, when I say I did it, look at this, Meta above 529.5 for 535 calls. I did this. And while I'm still in SPY, sweet, Meta, I entered right here. The moment it broke, I entered. SPY, I'm still sitting in SPY. There's no reason to sell. And then what happened on Meta? Meta went down, hit my stop loss. This is my stop loss. Does that make sense? Yo. And now there's multiple ways. Now, what people do is they're like, the moment this stop loss is about to get triggered, they're like, please God, please, I'll never make this mistake again. Just one last time. Please push it towards the upside so I can get out of the break even. I mean, bro, I'm from the third world country. I God, hey, God got a lot of stuff to worry about over there. People dying. All right. And you can't just be like, hey God, look after me. Fuck everybody else. All right. So it's you who gonna manage your position. It's you who gonna get out of a trade, and that's how you're gonna do it. So the moment it hits your stop loss, you need to get out. And one big reason, I'm not the best trader on the planet. I know there's so many people who trade so much better probably out there. The one best thing that I don't want to sound like narcissist, but the one best thing that I like about me in my trading style is the moment it hits my stop loss, bro, the whole world just falls silent. I need to get out of the trade. There's not even 1 second of hope that I sit there. And there's probably about 500 people that watch me trade live. Um, and you guys know what I mean. The moment it hits my stop loss, I'm out. All right, no emotions. Hit my stop loss, I'm out. I'm still sitting in my SPY trade. All right. My stop loss got triggered and I lost about 10% or 12% on this meta trade. Sweet. I'm still in meta. I'm still in SPY. And SPY started pushing. Now, what happened on this candle? Check this out. We had a decent push. Then we had this candle right here contained. Do you see it? This particular candle contained. I'll make this bigger. Check this out. This candle contained. Now, what I did was I went like this and I'm like, okay, I'll go long. No stress. My original stop loss for the original position is right here. I just added more for this position. All right, I'm like, sweet, I'll add more. Why? The trade's setting up nice. I was up about 10, I think 10 or 12% right now at this stage. I'm like, sweet, I'll add more. I'm just following my system, man. It's contained. I'm just following my system. Prices went up, nearly hit my profit target. But at this stage, I believe I took some profits. I'm not sure. I believe I took some profits. Maybe I didn't. But basically, what ended up happening was got contained again and it pushed. And definitely, the moment this hit, I got out of my half my position. So whatever I added here, whatever I jumped in here, I sold half. All right. No emotions, zero whatsoever. I sold half. That means this is how you manage your runners. So let's say if I did 10 contracts, the moment my first profit target hits, I am jumping out of 50%. That means I'm jumping out of five. That money's in my pocket now. Okay. The next level is these yellow lines that I have on my charts. I draw these are hourly levels. The moment this hits, I'm going to take another 50% off, which is 50% of the five contracts. Now I can't take 2.5 off. Usually I'm leaned towards more. Okay. So if I have a choice, like I'm gonna take 50% off of five, that means I have to divide in three or two. Do I take three off or do I take two off? Usually I'm leaned towards let me take three contracts off. Does it make sense? So I'll take another three off here. If it hits, but what if it rejects? What if it never hits? I'm getting out at the break even. So if I entered my original entry on the 10 contracts that I did at the price was $20, I got out five at let's say $40. If it reverses and hits my break even price on the option contract, I'm gonna jump out. All right, that means the money that I already put in my pocket, there's no way in the world I can lose that money. That makes sense? It's called negative risk management. That money is already in my pocket. That money is not coming out. From unrealized profits, I don't care what happens with unrealized profits. But my realized profits, that's my money. All right, that money is not leaving. That's how I think. And now I'm just sitting there and let's see what happens. It went and hit my next level. Now, what a lot of people do is when the levels get triggered, they're like, oh, maybe let's see if it breaks above this level. And they ignore the levels that you draw early morning. All right. Early morning, I drew this level. I know what I need to do. I know I have added a little bit more here. I added here. I entered here. I added more here. I took some profits. My next level is hitting. Originally, I planned to take 50% off here, which I did. Now I need to take another 50% off here. That's the right thing to do, right? That's just for this out of respect for these levels, man. Out of respect of hourly levels, I am going to take profits. I and what I do, I took profits. And you want to know what happened next? Boom. Prices just came down crashing. And this is 10 o'clock, and 10 o'clock, we're going to switch to 5-minute chart, right? And when I switch to the 5-minute chart, this is what's going on. It just, bro, it just crashed. Look at this. It crashed. Well, I got out of the break even. Does that make sense? It saves you so much money. So use the stock market and write this. Please write this down. And if you're sitting on the couch and not writing stuff down, man, you missing out on a lot of money. Write this down. Use the stock market to sort your good trades versus the bad trades. Let the stock market sort those trades out rather than you saying, oh, I don't like this trade, rather than you saying, I like this trade. Let the stock market do the job for you. The market will tell you that if it's a good trade or not. If it's a good trade, it'll keep on going and never hit your break even. If it's a bad trade, you've already taken some profits here. You've already taken some profits here. What are you losing? If it's a bad trade, you'll get out of the break even. So pretty much you're risking nothing. That makes sense? You're risking nothing. And that's how you let your runners run without any worries. Now, we'll go back to the 2-minute chart because I want to break down another trade that I did, which was AMD. And it was pretty much the same system, exact same system that we used. And while I was in this SPY trade and everything, my Meta stop loss got triggered. I'm in SPY trade. AMD started pushing. I'm like, okay, whatever. My stop loss got triggered on Meta, so I'm out of Meta. So I'm in SPY now, and I'm still waiting for a little pullback on AMD. And we started getting a little pullback. This is one little pullback. Check this out. What did I say? So we already broke down the SPY trade, so we'll break down AMD trade. How does it trend, or how does the structure works? One decent push gives you a pullback. One decent push gave you a pullback, and the pullback is contained within the previous candle towards the direction of the move. If the bottom wick was exceeding this, no problem. It needs to be contained towards the direction of the move. It would be just this step. All right, just towards the direction of the move. That means if you're playing calls, it needs to be contained within the previous candle towards the upside. If you're playing puts, it needs to be contained within the previous candle towards the downside. And that's the only thing that you need to worry about. So AMD, this is what's going on. And I'm like, okay, this looks good. If the next candle breaks the highs of this particular candle, I'm going long. And this is actually what I did. AMD above 158.2 for 160 calls. 158.2 for 160 calls. Right? And this trade turned out to 90% winner. That means if you put $1,000 into this trade, you made plus 900. Now, of course, you didn't make exact 900, but because you're going to take profits along the way as well, but you get the point. Now, let's see how it goes. I'm in a trade, right? First profit target, 159.3, first hourly level. So what we're going to do, let's say if we jumped in, I think my fill price was about 2.35 or something, whatever it was. And let's say if I did 20 contracts, how are we going to manage this? All right. The moment it hits this number, how many contracts are we taking off? We're taking off 10 contracts, right? That's what we're going to do. And hit the number. Boom. What I'm going to do, I'm going to take 50% off my runners. And I did. Sweet. Now I'm sitting in the trade and it started playing up a little bit. No stress. I'm still in the trade. No problem. Next profit target that I have is 161.15-ish right here. And 10 o'clock about to happen on the next candle. So we're going to switch the time frame to 5-minute chart. Sweet. Already took 50% off. I'm sitting in the trade and it hits my next level. What do I do? So that means from 2.35 that I did, I took 10 contracts off. Let's say if I took off at $3, for example, that means I made $55 a contract. I did 55 bucks a contract. That means 550 bucks is already in my pocket. Sweet. The next level, I'm still holding 10 contracts. The next level hits, I'm going to sell 5. And let's say by the time this hits, these contracts are sitting at 350 or let's say 335. Make it easy. 100 bucks a contract. We took off another 5. That means another 500 in my pocket. Now we are using the market to sort the trades out for us. Is it a good trade or bad? Now, should I take all my profits here? No. Why not? Now, the question would be, bro, but what if I'm doing only one contract? Don't do one contract ever. Doing one contract is like you asking for trouble. Never do one contract. You can do minimum is 2. If you can't afford 2 contracts, you need to, bro, 2024, you need to go out there and make some fucking money. All right. So you can afford 2 contracts. So if you're able to jump into, you take out one here, and where do you take the other one off? What I personally have figured out, if you're only doing 2 contracts, is you need to follow as a structure. That means the moment the structure breaks, where we are able to break below the previous high low, the structure breaks, the uptrend breaks, that becomes a point for you to sell. You're like, all right, I'm out, done. But that's because you only have one contract. So you don't want to just let it run all the way up to freaking 100% trade and then run back to break even. It just doesn't make sense. All right. Essentially, I want you to do at least 3 contracts, so you're able to like take one off, and one either break even or towards the end of the day or break up the structure. But anyway, so took another 5 off. Now 550 plus 500 is already in my pocket, and next level is this 152.5 that I'm watching. Or stop loss is break even on the option contract or break of the structure. That's a stop loss. Either break even or break of structure, whichever triggers first. All right. I already took profits. The money's already in my pocket. I'm not dropping that money off. That's already in. So now let's see what happens next. And we pushed. Everything looking good. And then the market just started fucking coming down, yo. Like, look at this. Everything started coming down. And my break even got triggered probably a little bit later. Roughly around here, my break even, I think, got triggered. Maybe, yeah, roughly around here, my break even got triggered. And I jumped out. But basically, what I did is now, yes, if I imagine this, if I would not have taken my profits here, think about it. If I would not have taken my profits at the next hourly level, what would happen? I'm like, oh, maybe you're gonna push up to this. Bro, you already made a decent move. I'm already up freaking sexy amount of money, right? If you have an hourly level there, out of respect for the hourly level, you need to take some profits. I very much believe that a lot of people, if you follow this system, you will make money. But the thing that is actually standing between you, between let's say this is you and this is the money that you want to get to, is your account size, your trading account size. Um, so you're not able to manage your runners. You let emotions come in the way, right? So the best thing that you can do, personally, what I believe is literally you are using a system at this point. If you're watching this video, if you're watching this webinar right now, you are exposed to a system that has worked so well for me over the years, and I'm giving you the sauce because I want you to do well. I personally believe you need to add more money into your trading account. If you have money in the bank, add more money in the trading account. Do yourself a favor. So you're able to take 3 or 4 or 5 contracts. So you're able to manage it a little bit better. That makes sense? If you can't afford it, yeah, I get it. But if you're living in one of the Western countries, man, I don't think there's any excuses. I did it back in the day, and I was only 18, 19-year-old kid. So I don't know. Um, all right. This is how you pick the stocks. This is how you manage your runners. And there was another trade that I did, which was Tesla. And that trade actually happened on a 5-minute chart because I took the trade a little bit later in the afternoon, or no afternoon, a little bit later in the morning. Um, the trend, but towards the downside. So I want to break it down. All right, this is the trend. What happened? Same stuff. We had a one impulse move. What do we need to wait for? We need to wait for a pullback. Yeah. And what has to happen for the pullback for us to jump into a trade? The pullback has to be contained within the previous candle towards the direction of the move. That means it needs to be contained towards, oh man, this is too much fucking sauce for YouTube. All right, fuck it. Okay. Is what it is. Pullback started happening. This is the pullback. Is it contained? Yeah. Is contained towards the direction of the move? Yes. So where do the entry goes? Entry becomes here. Stop loss goes here. Sweet. Let's see what happens on the next candle. Boom. The entry never got triggered. Yeah. Entry never got triggered. So is this particular candle, this candle right here, contained within the previous candle? Towards the direction of the move. We want to trade the downside. The downside is contained. Now, what do? We go, okay, let's see what happens now. I started watching this 222.5. The reason why, instead of just the low of this candle, because the 200 moving average was there, I wanted it to just let go of the 200 moving average completely for me to jump into the trade. Right, that's why I kind of rounded off the number to, instead of the lows of 222.57, which was the lows right here, I started watching 222.5. Like legit, look at this. Tesla below 222.5 for 220 puts, because I just wanted to round off the number and let go of the 200 moving average on a 5-minute chart completely. My stop loss was on this side of the candle, and the moment it broke, I jumped in. First profit target is the first profit target for me was this yellow line, but I didn't take profits at the yellow line. Why? Because I was like, last time buyers came just early morning, just couple hours, just like literally couple candles ago, the buyers came around at this level. All right, prices broke below. That's where the buyers came around. So I'm like, okay, if I'm adding here, man, I'll take some profits. The first profit taking will happen at the low of the day, because the level was right here. I'm like, all right, just another 20, 30 cents. I believe the prices can come down. So that became my first profit taken. I took 50 off, 50% off, and I'm letting my runners run. And it's like playing around, whatever. And I added more actually here. This candle is contained as well. Check this out. This candle contained towards the direction of the move. And I added more bank, first profit taking, right? Now, what am I doing with the remainder? Either stop loss break even, or I'm going to take more off at the next hourly level. And this is what happened. Everything looked good, made a huge pullback. And this is just not this. Actually, everything made a huge pullback. With it, what was going on the SPY? This is like 1045. Check this SPY, 1045. Right here. Everything made a huge bounce. SPY made a huge bounce. QQQs made a huge bounce, 1045. Everything made a huge bounce. And that was the price point roughly around where my break even started getting triggered and I jumped out. But that was, again, a beautiful trade, beautiful system in place, beautiful entries, beautiful exits, no emotions whatsoever. And now you know the time frames that I use. Now you know the trend, how I watch, the structures I watch, how I enter, how I exit, how do I pick the stocks that I trade, and how do I manage my runners. And that's exactly what I did, all live, um, to make what, $4,700 from trading. I personally think I should have made more money. I could have added more size, but I think I was just coming back from a red day on Monday. I lost like $3,500 doing exactly the same stuff. I did exactly the same things. Let the one move happen, then the pullback, containment, jump into trade, exact same stuff. But because I was red a day before, I just was like kind of taking it easy. Didn't want to do big position size just because I was coming back from a red day. After red day, normally what people do is when they're coming back from a red day or red trade, the next day or next trade they take is usually a bigger position size. And I know if normal people do this, normal people do not get rich. So I need to not be like normal people. All right. And you need to be different. So I do exactly opposite. So when I'm coming back from a red day or red trade, um, I am doing, instead of big, I'm doing small. So I'm doing small position rather than big position up until I break the streak. So red day, sweet. Up until I clock one green day, I'm playing small. So imagine if I had today again as a red day. tomorrow it will be even smaller, even smaller. Once I had like 2 or 3 weeks of red days every single day, yo. Everybody, all my students were printing money, but somehow I was in such a shit mindset. Shit is like such a crappy mindset. I was not able to take the trades that was working. Somehow I was only able to take the trades which I was losing money on. Like I would be like, oh, I don't like this. But the trades that I will take and will always end up happening to be a loser. And I had this like for 3 weeks in a row, every day red, every day red. And you know how I got out of that? Because every single day I'm red, I'm still dropping the small size, small size. Got to a stage where I'm doing such a small size that I think I was like up 70 or 100 bucks. That's small size, yo. Think about it. For my position size, got to a stage where I'm like up 70 or 100 bucks. I'm like, you know what? I'm calling it a day. You know what ended up happening? I broke the streak. I was red every day. I broke the chain. So when you're coming back from red day, red trade, your focus should be not to catch a big move. Your focus should be just to break the chain of the losers. Once you do that, bro, you're good to go. You pretty much reset everything. And that was the goal for me for the day, that to wait for the trades to a point where I can reset my trading week and start fresh. And now, yesterday I was down 3,500. Today I'm up 4,700. So that means I'm up 1,200 bucks on the week. And now I've resetted everything. And now I'll be able to trade more fresh and more better for tomorrow and next 3 days that's left in the week. That makes sense to everybody? All right. That's it, yo. And if you're watching this on YouTube, fam, make sure you subscribe. And make sure you take this fucking seriously, because hey, this is no fucking Breaking Bad. Take some goddamn notes. Go rewind this video, go back. And if you're watching this live right now and you're on the Zoom call, please, the moment I post this on YouTube, go sit down, take some notes, because there's a lot of sauce. All right. And it's only going to be a 30, 40 minute long video, so you can do this. Sweet. That's all, fam. I'm out. You guys have fun, and I'm gonna go chill. Actually, I'm super hungry. I'm gonna go eat, and then probably go to bed. All right. Um, yeah. He said there's too much sauce. I know, bro. There's so much fucking sauce going on YouTube. YouTube people's not gonna take it seriously anyway. So people who take it seriously, they're gonna make money, and they're gonna be help like super grateful. So those are the people I do it for. All right, guys. I'm out. Peace. Look out for yourself. Goodbye.